Sikshayati, platform for eminent authors, engaging teachers, successful students. To know more, email. Joint venture accounts, separate books. A and B entered into a joint venture for sale of specified goods, paying rupees 60,000 and 40,000 respectively in a joint bank account, sharing profits and losses in the ratio of 3:5. It was agreed that joint bank account is to be used for purchases and sales, and each venturer is to meet his joint venture expenses out of private accounts. Each venturer is to charge a commission at the rate of 5% on sales made by him. The transactions were as follows. A purchased goods costing rupees 40,000 and expenses in connection thereof amounted to rupees 6,000. He sold 90% of these goods at 30% over the cost price, and selling expenses amounted to rupees 2,500. B purchased goods costing 50,000 and expenses in connection thereof amounted to rupees 6,500. He sold 80% of these goods at 25% over the cost price, and selling expenses amounted to rupees 3,000. 1/5 of the remaining goods purchased by A were destroyed by fire, and the insurance company paid a claim of rupees 2,000. Write up joint venture account, joint bank account, and venturers accounts. Computation of sales. Sales made by A. Cost of goods sold is 90% of 40,000, the cost of goods, and 6,000 expenses. So 90% of 46,000 is 41,400. Plus add profits on goods is 30% of 41,400, so that is 12,420. So the value of sales made by A is 53,820. Sales made by B. Cost of goods sold is 80% of the cost of goods 50,000 and 6,500 is expenses. So 80% of 56,500, that comes to 45,200. Add profits 25% on 45,200, that comes to 11,300. So the total value of sales made by B is 56,500. Computation of closing stock. 90% of goods were sold by A, so 10% goods remained as unsold stock. Again, 1/5 of the 10% was destroyed by fire, so that has to be subtracted from the stock in the hands of A. Now, for B, 80% goods were sold by B, so therefore 20% remained as unsold stock. These unsold stock will remain in joint venture account. So for A, 10% of the cost of goods is 40,000 is cost, 6,000 expenses. So value of 10% goods, cost price of the 10% of the goods is 4,600. Less the goods destroyed 1/5, so 1/5 of 4,600 is 920. So the value of stock lying in hand is 3,680 with A. For B, the 80% of the goods were sold, so 20% is lying in stock. Value of goods is 550,000 and 6,500 expenses. So 20% of 56,500 is equal to 11,300. So total closing stock in joint venture account is with A is 3,680 and with B is 11,300. So total comes to 14,980. Now let us prepare joint venture account. So in the credit side is the amount going to joint bank account in respect of sales by A 3,820 and sales by B is 56,500. So total 1,10,320. and the amount received by insurance claim also goes to joint venture account, the 2000 rupees, and the value of closing stock lying in joint venture account lying with A and B is 14,980. In the debit side, we will go to joint bank account. From money taken from joint bank account for goods purchased by A is 40,000 and goods purchased by B is 50,000, so 90,000. To co-venturers accounts, the expenses in purchase expenses incurred by A 6,000, B 6,500, so that is debited to joint venture account 12,500. Again, sales expenses incurred by A 2,500 and B 3,000, so that also is debited to joint venture account rupees 5,500. Then commission taken by co-venturers, that is also debited to joint venture account, so that is 5% on sales 53,820 by A, that comes to 2691, and for B 5% on 56,500, that is 2825. So total commission account by commission account is 5,560. And also then the balance figure is the profit share, that A takes 3/8 of the balance 13,784, that comes to 5169, and B gets 5/8, so B gets 5/8 of 13,784, that is 8,615. Now let us look at joint bank account. So in the debit side is the money brought in by co-venturers, A 60,000 and B 40,000 is 1 lakh. And again the sales proceed is 1,10,320, sales made by A and sales made by B, and then insurance claim is 2,000, so that is the joint venture account, joint bank account debited. And then in the credit side is the purchases, for purchases 90,000, so in the bank account is closing balance is 1,22,320. Now let's look at co-venturers account, A and B. A in the credit side is A capital invested by A 60,000, B 40,000. Then expenses incurred by A, sales and purchase expenses, A 8,500, B 9,500. Then commission accrued to A is 2691 and B 1225, and the profit shared by them 5169A and 8615B. So that is the balance carried forward by joint ventures account. As there is no mention about the final settlement, the value of closing stock and balances on joint ventures account and joint bank account will be carried forward next year. In case of stock destroyed, only insurance claim received is taken as income in the joint venture and joint bank account. Thank you for watching the video. Kindly write your comments. Click on the red subscribe button at the bottom of the video to get more details and free ebook. Email us.